Let me bring in Joe Duran. He's a hot shot on Wall Street. This man with the accent, he is the head of personal finance for Goldman Sachs, no less. Are you okay with companies?
And here I am in New York City, which is so nice.
That's right, in New York City. Now, Are you okay with financial companies like American Express pushing these woke ideologies? How do you feel about that?
Well, look, I'm not a politician, and I do know, as someone who grew up in Zimbabwe, that everyone needs a fair crack. And as somebody who came to America, I've never found a nation in the world that's more open-minded and more willing to give everyone an opportunity. So I am probably the wrong person to bring this up. I do very much believe we all have a responsibility to give everybody a chance to belong and to succeed in whatever organization you are. That I think is something we all believe, and everyone at Goldman Sachs very much cares about.
I did not want to put you on the spot, Joe, talking about American Express when you're from Goldman. I didn't mean to do that, but I think it's an important issue which is going to have to be dealt with here. Let's get to the markets. The market just keep on going up. Most investors, most of the analysts that we talk to on the show, they're still bullish. They think it can go up some more. But I'm nervous, really, really nervous. When I see anything go up like that for years on end, I have to think that the dance is coming to an end pretty soon. What do you think?
Well, I think it's natural to be nervous. We have had a long recovery. We are at higher valuations. And just a couple of facts to give you. We did have a very significant bear market earlier last year. You know, we fell 35% in 6 weeks. That's never happened ever in the history of the market. And so you have to think of this as a new recovery. And typically when you have an expansion in the markets, the average advance is around 200%, 190% or so. And that's the average. And we today are up about 101%, which means there might be a lot more movement up. And so we also know that as the market advances for longer, you're going to see more declines, and they're typically in the 5 to 10% range. You'll have 2 declines of 5% or so every year, and you should have a 10% decline every 2 years, which would suggest that we are overdue for what I call a correction, which means you should not sell, but you should be prepared for volatility. And what we tell people is, look, the long-term picture for US stocks is still good, but you need to be balanced and diversified. You need to make sure that you don't have so much risk in your portfolio, because if you own stocks today, you've had so much advancement that if you started at 50-50, you might be 60-40 in stocks versus bonds, and therefore you have more risk in your portfolio than you should. And so it's a good time when you've had a big advance to rebalance your portfolios, to be diversified and make sure that you're invested in everything.
Okay, now that's advice I might take because I've only got 10% in bonds and 90% in stocks. But how foolish of me. Joe, we will get back to you very soon, and I promise not to put you on the spot ever again, because you're all right.
I'm sure you will. But I'm not going to ask you to dance either.
Oh, thank God for that. Thanks, Joe. See you soon.